Today I have with me Vipul Parekh, co-founder of BigBasket, one of the most trusted and scaled grocers in India, who started the trend of online grocery.
I don't think I can call myself a MBA graduate or a business person anymore. I'm a sabji wala.
And 2019, I saw one of the interviews that you gave. You mentioned at that point of time your prediction that there will be 4 large online grocers in India. In 5 years, the landscape has completely changed.
And I was completely wrong.
It would have taken all the grocers by surprise.
It has taken everybody by surprise, including the incumbents.
People initially said that this model will never be profitable. But
Profitability is going to be a little stretched. It's not going to be easy to come in this business. Every store has to become profitable, or at least majority of the stores have to be profitable to cover all the costs of your other stores which are unprofitable.
I just returned from US and I have a 5-year-old son, so he expects a gift every time
I know.
I come back. So this time I couldn't take anything. So what I usually do is order on e-commerce and it will be delivered in 1-2 days.
2-3 days, yeah.
So what I did this time is...
You get on quick commerce, it comes in 1 hour. And that's the...
But how much of this 10-minute delivery market share would BigBasket have today?
We would have about 10 to 12% market share.
Why is this category only so dynamic that let's say a 21-year-old can come 2 years earlier and disrupt the entire category?
21-year-old did not disrupt the category. The category disruption happened somewhere else.
People would have expected BigBasket to take a lead as the world is changing. You mentioned a few reasons, but what do you think was the fundamental DNA difference that now you are playing a catch-up game?
In this particular case, we were...
Hi, this is Siddharth Aluwalia, your host at Neon Show and co-founder of Neon Fund, a B2B SaaS fund that invests in the most enterprising software companies built from India for the globe. Today, I have with me Vipul Parekh, co-founder of BigBasket, one of the most trusted and scaled grocers in India, who started the trend of online grocery.
Right.
Vipul, welcome to the Neon Show.
My pleasure, Siddharth. Thank you for having me.
Vipul, you have delivered online groceries for almost 25 years now.
I'm a dyed-in-the-wool sabji wala now. I don't think I can call myself a MBA graduate or a business person anymore. I'm a sabji wala.
You are one of the most qualified sabji walas of the country.
Exactly.
I could say that. And you built Fabmall, which got sold to Aditya Birla in 2007 and rebranded to More as we know it, and More got acquired by Amazon.
Yes.
And you started again in 2011, but this time with a bang.
Right.
You were the largest Series A of your time,
right,
when BigBasket started. And you pioneered the concept called dark stores, along with many other innovations, right?
Yes.
So how do you feel about this journey?
Oh, it's been a very educative journey. And I think we've learned a lot, have been taught a lot by the market and by competitors and by the ecosystem and investors. But if I were to look back and look at this 13 years that we have spent building BigBasket, I wouldn't exchange it for anything in the world. It's just been fabulous. One thing I believe is that, I used to wonder when I used to work with Wipro and other companies before that, should I actually continue working in a corporate role for the rest of my life? Should I become an entrepreneur? And then when I took the plunge, and in the first few years, I sort of kept asking myself, did I do the right thing? Was this really stupid thing to do? Ye pagalpan to nahi hai. This was still early days. You didn't have as many startups as you had today. But I think after about 2-3 years, I realized, I said, I don't think I can ever go back to working for a corporate group or a full-time job. I would rather be on my own. Doesn't matter what the outcome may be. And we were still long ways away from any, let me say, a discernible, profitable outcome. And we said, but the journey was itself just fabulous. It's just been amazing building out BigBasket.
And 2019, I saw one of the interviews that you gave with Brand Capital in preparation of this podcast, right? You mentioned at that point of time your prediction that there will be 4 large online grocers in India: BigBasket, Amazon, Jio, and I think one more other. I don't remember the name. I think in 5 years the landscape has completely changed.
And I was completely wrong. And this is not the first time I've been wrong. I think so when we started in '99, we thought online retail would become very big, very early.
Yeah.
And when I look back now, I said, we must be, I don't know what we were drinking. But it was something which really just warped our sense of imagination. And it took us it took almost 10 years for the online market to really take off. And when I look back now, 3-4 years back, and we said, quick commerce was still very, very early. And said, will it really become large? And we felt it had a space in India. We had experimented with something like that almost about 5-6 years back with not much, traction. And when this happened, the landscape has changed completely. And I'm happy to be proven wrong, I think.
So you would have given it a lot of thought, right? How last 3-4 years have changed the online grocery delivery in India.
Right.
So what do you think goes behind it? What has changed fundamentally in consumer behavior?
I think we underestimated, how stratified our Indian market is, and sometimes.
What do you mean by that?
So it's, most people don't look at it from that perspective. So let me explain that. See, we are, and when I talk to investors, and especially to foreign investors, the way I explain that is, so we have a European country sitting on top of India, and then we have a ASEAN country below that, and then we have a sub-Saharan Africa, and these are really three countries within India, and we were operating in Europe, right? And so therefore, what we didn't realize is that this Europe really doesn't care about prices, doesn't care about what the premium you're paying. They lead a European life, and they may be cloistered in their own gated communities in India, and but their aspirations are international, their travels are international, their consumption is international. They consume similar brands. In fact, most brands in India find their footing there. So this top 30 million market of India, which is 30 million households, which most people call India 1 or whatever you want to call it, is very, very international. And this is not a value-based market. Grocery, if you look at it, the popular definition is grocery is value-based. People look at prices and buy. But that's for the entire subsubstance of the market. But this is not, for this cohort, it doesn't matter. They're willing to pay whatever is required to get convenience. And I think that is what has played out. What has changed from a customer, there's nothing that has changed. It's just that a customer got a service which they loved. And what is there not to love as a customer?
Yeah.
I mean, I love it. My wife has moved to online grocery, to quick commerce completely. And you get in 10 minutes what you need to order. You don't need to plan. You don't need to stock. You run out of something. You don't need to run through your Kirana store and do all that. So it's this really a huge convenience. And so people adopt this service brilliantly. So that's from a customer side. Interestingly, what also happened, and which I think colored a lot of our opinions in retrospect, was that this model didn't work anywhere else. So why did it work in India, right? From a customer perspective, yes, it will work anywhere else. You give it in 10 minutes, every customer in the world will buy it. But why weren't people able to deliver this anywhere else? And I think there is a unique conjunction of three factors that happened in India, which is different from the rest of the world. One is obviously we have very high density, right? Only China has this kind of density. And why is density important? Because you can get a very large revenue from a 1 kilometer, 1.5 kilometer kind of radius, which you can't do in other places in the world. Because that is important. Otherwise, you can't amortize your fixed costs, or you can't deliver fast enough. How can you deliver in 10 minutes unless if the guy is 10 kilometers away? There's no way in Indian traffic you're reaching him ever, right? Not even in a couple of hours. So I think that becomes important. So density was one key thing. The second thing was, the kind of retail store density or retail store penetration. So look at number of grocery stores. I'll give you an example. I was setting up new stores for us when we were doing a physical retail business way back in 99, 2000. And the number of grocery stores that were there in Indranagar, I think we have lesser number of stores today in Indranagar than then.
Wow. That's an amazing fact.
Yeah, it's actually, I can count because I know the names that were there. I can count the names of there. And stores have, and these I'm talking of supermarkets, not Kirana stores, supermarkets. And supermarkets have actually disappeared in India or disappearing. And the reason for that is very high retail rents. And therefore, and your catchment is again only 1.5 to 2 kilometers. People can't travel more. So every year your rent goes up by 10%, and your manpower costs go up by 10%, and your sales don't increase because that many people don't start buying more food just because it's the next year. So they completely go out of business. So the funny thing that happened in India was, as stores became older, they became more unprofitable instead of becoming profitable, which is the reverse which happens everywhere else in the world. Because you amortize your costs, stores become more profitable. In India, they become more unprofitable, particularly in grocery. So that's the second phenomenon. Your retail store density in India is very, very low. And that, coupled with the fact that your overall population density is very high, makes for a very fertile market. And the third factor which contributed is that we have the lowest manpower cost anywhere in the world. China is 3x more expensive, right, in terms of cost per delivery, which is why quick commerce doesn't work even in China. Because cost per delivery, finally, this is always going to be low order value, right? If your order value is going to be $8, $10, $5, $3, how are you going to make money unless your delivery cost is really low? And I think that delivery cost, which is low, which results in lower dark store operation costs, makes it work. So I think this combination of people factor, customers love the service, and the fact that all the economic factors worked well, as what has really transpired to make this a very potent model. And which is why people poured money into it. It scaled very rapidly, and it's happened over the last 2 years.
Yes.
It's not been some 20 years in the in the making. So that's the amazing part of it.
I think it would have taken the all the grocers by surprise.
It has taken everybody by surprise, including the incumbents or the the people who are sitting there like us. I think it's taken everybody by surprise.
Wow. And people initially said that this model will never be profitable. But you said Blinkit today contributes to almost $15 billion of Zomato's net worth.
That is valuation.
That's valuation, but overall, it's a profitable company in itself.
Yeah. It is contribution margin positive, right? Like we are. I think the important thing to hear is that profitability is going to be a little stretched. It's not going to be easy to come in this business, right? And I think there are multiple things which need to still come together, which have not yet come together for it to really work. Remember that finally, the way the math works is how is a retail store profitable? Let me give you that analogy. Every store has to become profitable, or at least majority of the stores have to be profitable to cover all the costs of your other stores which are unprofitable. The same is true for dark stores, right? Now, how does a dark store become profitable? A dark store becomes profitable when you get a significant share of revenue on that dark store from your catchment area, right? And your costs are therefore covered. Now, beyond a point, you have a catchment area. Retail store also has a catchment area. Beyond that, you're delivering 1.5 kilometers, 1 kilometer, because you deliver in 10 minutes. Beyond that, customers are not going to come. So there is a finite limit to revenue that you can get out of it. Now, the only way to extract more revenue is to either get more market share or to get more categories so that you get higher wallet share. So I think the market share part of it has now, at least in the most popular areas, is sort of stabilized. Everybody's got their market share. Market share movements are going to be very hard to come by. But I think there is still a lot of scope in terms of what new categories can be added on. And I think that people are still discovering what people will buy. I mean, what will they buy along with their, bhaji and sabji and, dal chawal is something which, while there is a lot of noise about it, I think the jury is out in terms of what categories will work consistently and will also deliver high revenue. Yeah, I think if that works, then I think this model will be really profitable.
I'll take an example. I just returned from US and I have a 5-year-old son, so he expects a gift every time I come back, right? So this time I couldn't take anything. So what I usually do is order on e-commerce and it will be delivered in 1-2 days.
2-3 days, yeah.
So what I did this time is
you get on quick commerce, it comes in 1 hour, and that's so think of it this way now. You would never have expected toys to be delivered in, right? And more importantly, even if you have to go and buy, you start wondering, where is the toy store? How do I go? Will I have parking? I don't know what to buy. It's so much harder. So this makes it much easier. So toys, for example, but again, how often are you going to buy toys? How much of your toy budget is going to be there? And you need a large assortment to buy from. So will it only be for these kind of occasions, which is an emergency or a return gift? And therefore, what kind of value will you derive from the category? So I think these are the things that all of us are grappling with. It's not that anybody's found the perfect mix, but I think we will all discover which categories are intuitively closer to grocery and can be sold through quick commerce.
Yeah. And in case of BigBasket, the fastest delivery that you came to is 30 minutes, right? Or you also came into a 10-minute delivery?
We've been 10 for a long time now.
Yeah.
We've been 10 minutes for a very long time.
But how much of this 10-minute delivery market share would BigBasket have today?
We would have about 10 to 12% market share.
Yeah.
But it's climbing month on month. I think we are gaining share. But we also have a large slotted delivery business, right? So if you put that together, we are still a potent competitor. I think where we are heading is that we will actually essentially just transform into a quick commerce company. We're not going to have two businesses like we have today, because I think the writing is on the wall. Let's face it, it's been on the wall for a long time. And then we took a call quite some time back saying we'll be a single quick commerce company. Because quick commerce is, the only challenge is quick commerce is not just grocery. We've been traditionally a grocery company, right? And grocery and contiguous categories. Take general merchandise, take beauty, take meat, all of those.
Electronics, some part also.
Maybe some part of electronics. But quick commerce is really transitioning to becoming horizontal commerce. Yeah. With high frequency categories as the lead play. So that gets the customer in, grocery gets the customer in, then you sell everything else. Unlike Amazon, where you have everything, so you come there. So I think what categories will sell, how it will sell is something that we will all discover. But we will transition to this pretty soon. I mean, we are almost there. We should be completing the transition.
So you're saying that beyond groceries also BigBasket will enter into...
We will do multiple categories. And we have a natural advantage there or a natural capability as the Tata Group to play on it, because a lot of the core capabilities in different assortments lie with Tata's. I mean, take electronics, for example. Chroma is the largest retail consumer electronics company. You take jewellery, Titan, or fashion, yep. But, West Side, Tanishq, you have Tata Click, you have whole host. So there are multiple categories where they have a very dominant presence. And so therefore, more than, buying relationship, understanding how the category works and how to, which products to take a bet on, how do you sell it, how do you position it, how do you price it. I think that will work very well. And those learnings we can extract very quickly. I think that's the advantage we have. We will get cross category. We'll be into pharma, for example.
Pharma, you already have 1mg as a group.
Yeah.
And so you think...
And so therefore, our primary service will be a 10-minute service.
Okay.
Nothing else. And if you want slotted, it's your choice. Whether you want to. So today, for example, we offer slotted as a separate option, where you take a separate path to get into slotted. But we'll remove that. It'll just become a single listing. Default is 10 minutes. If you want to take it 1 hour later, your choice.
But you're thinking that also like the original BigBasket proposition was get delivery the next day with better prices.
Right.
So do you still have the better prices advantage?
Yeah, we will have, and we are thinking through some innovative ways to do it. And I at this point in time, since we have not launched it, I can't exactly tell you.
Sure.
But we'll continue to see. One of our core propositions has always been that provide more value where people do monthly buying or stocking. And so I think we want to continue to build that even in this model. So we're thinking through which is the best way to do this and how do we, because think of it this way, in a quick commerce, this thing, you're running fast. You don't want to spend time trying to figure out coupon, that 5% zyada milega, nahi milega. But when you're buying for the month, where the housewife is buying for the month, she's thinking through building a long list. She's buying multiple things. The bill value is large. And there you're really worried about, is the price right? And today, typical basket today, what happens to people who buy only on quick commerce is it gets split between quick commerce and part of it goes to the physical store. And a lot of it may just end up in quick commerce, but it goes to the physical store because you may not have the entire assortment or you don't have the pricing. You want to buy a large amount, you will go to physical store. So I think that is what is happening. We want to see if we can cover that too.
Yeah. I'll tell you how our behavior has changed. So today, now our cook tells us in the morning when he or she
what do we need?
What do you need? And tells me.
You order that.
Order that.
Exactly. So a lot of households have moved that. So, in this 30 million, I wouldn't be surprised if most people would move to a 80-90% quick commerce, right? Because this is the country which doesn't really care. You're a European living in India. You have such a big arbitrage on your time. Why would you spend time trying to do something which is productive or is very expensive for you?
Yeah.
From that perspective, right? So you wouldn't do it.
So BigBasket has been able to transition, right? I think the earlier model was X day slot, then it was next day slot, it was then same day slot, and this is now 10-minute delivery. I think the market is so dynamic, and this is one category in India. Why is this category only so dynamic that let's say a 21-year-old can come 2 years earlier and disrupt the entire category?
No, I think, the 21-year-old did not disrupt the category. The category disruption happened somewhere else, right? 10-minute delivery. I remember speaking to the Getter founder before even Zepto had launched. And I was talking to them because they were doing these experiments in London where they were servicing our dark stores. And I was trying to understand what they were doing. And they said very high gross margins and we have 35-40% gross margin. I said 35-40% gross margin to kisi ne dekha nahi hai India mein, right? And I said not in grocery or anywhere else in the world. And he said we carry only this and we have only 1,000 SKUs and we deliver on bikes. And so therefore the opportunity has been around for some time, right? So it's not that, I think the fact was that the lot of whether it's Blinkit who made the transition and saw the opportunity, made the transition very quickly and committed to it. Whether it's Instamart who saw, Instamart in fact started before Blinkit or even Zepto. In fact, they did the math, started grocery even before that. And then Zepto came along, Zepto's. So I think everybody caught the wave at the right time. So and this is a confluence of capital plus the customer is ready. We have a large customer base who's already got exposed to grocery buying online, and so they're ripe to move to a new format. So I think that's worked beautifully for the quick commerce market. So that's what has propelled this. But this will, it's very unlikely. These disruptions will keep happening. But I don't see a timing disruption. I think we may still have disruptions in terms of what categories will get delivered. In fact, my feeling is the next wave could be, you may have niche categories happening in quick commerce. I read recently somebody is doing 10-minute food delivery now. Because otherwise food delivery is now slower than grocery, right? So, and you would have thought, food, I'm hungry, I want to eat right now. Khana, grocery 1 घंटे में भी आए चलेगा, लेकिन खाना तो अभी आना चाहिए. But khana comes later than grocery now. And that's a reverse thing we have today. So I think tomorrow people will experiment with maybe subcategories which will come online, or maybe quick commerce itself will become multiple category, carry everything under one umbrella, because finally the customer is not going to have 25 apps. Let's face it, he'll take 3-4 and say, I stay with it, and this is my ecosystem, and I'm committed to it, and I'll keep buying from there. So I think these paths will evolve, and there could potentially be some disruption, but it won't be a mega disruption like that's happened. But you never know. Never say never. I wouldn't venture a forecast again after having got it wrong so many times.
No, but as our entrepreneurs, right, we just have to be right only once, big time.
Exactly. Then you're through. That's true. But not necessarily. So that sometimes it takes time. You can be right the first time, but to get it to success, it's not necessarily just revenue. It takes time to build an organization. And even take Deepinder, for example, or Zomato, and I admire the resilience they've shown. That company has been around for a long time.
Yeah.
Even Swiggy, right? They've gone through multiple challenges, weathered downturns, it takes time to build a very large, successful brand. And which is what they show. 20-25 years in the making, committed billions of dollars, but really built a very solid brand and organization. So whether you take Swiggy or whether you take each one of these brands, right? Even take Flipkart, right? Flipkart started in 2006, 2007.
Yeah.
And really it's taken that long to really build a 200,000 crore company now. But the potential exists. So not everybody makes the transition, but it takes time for this to happen. It's never 2-3 years. And there are lots of slips between the cup and the lip, and people have to weather those downturns. Yeah. They keep coming and going.
So one argument is that DMart today, right, the last valuation I checked was $40 billion.
Right.
And Zomato today is a $30 billion company.
Right.
So it's hard to digest. Where do you think?
Think of it this way. Take DoorDash, for example. Right. Look at the size of it. Look at the multiple that it gets. So I think it's sometimes markets value you, give you a high value, be happy with it, enjoy it, because you don't know. Because markets, see, at the end of the day, the market share price at that point in time is always not a great reflection of. You have to see it over a period of time. And the best way to do that is sort of to look in history and see, or look and say how the big companies are valued and how they grew and what price earnings growth multiple did you get. And I think that's one way to see it. Yeah, because eventually it catches up. It's caught up with them on Amazon. It's caught up with the best company in the world. Yeah. So it catches up.
I think the argument is the market very few times behave in a sane manner. Most of the time they are insane.
And it either completely destroys you or can completely lift you. And both can happen.
Yeah.
Right? Or it can even be dormant for a very long period of time.
Almost 12 to 18 months ago, Zomato was valued at $4 billion.
Right.
And today is 7x, right? In the same public market.
Right.
And for them, nothing has changed.
Yeah, nothing has changed. And they're still building the same product. They're still building the same. And I think that's one way to see it. And that's why not to worry too much about the share price. I think intrinsically, as long as you're growing and you're more profitable and the business is building well, that's a great way to look at it.
But why do you think India doesn't have its own Walmart? Like DMart is a small comparison to that.
It is, but Walmart has been 100 years in the making.
Yeah.
Oh God, no, not 100 years, but 1960s, 70, somewhere in that, right? 1970 is when they really started expanding. And you have to look at the size of the US market too. Yeah. Finally, the consumption size is very, very large. And we are very small. So the day India market reaches Walmart, DMart will be half the size of Walmart. Or maybe the size of Walmart, right? So that's going to happen. Think of it this way. When we started in 2011, and if somebody told me Flipkart would cross revenues of 200,000 crores, I said, you must be joking.
Yeah.
India. And it's happened. In 15 years, it's happened, right? Less than 15 years, it's happened. They've gone from 0 to 200,000 crores. And there are two companies at this size, both Amazon and Flipkart. So 400,000 crores of retail built in the last 15 years.
Yeah.
So this is just tremendous growth.
Yeah.
So imagine if they had the same number over the next 15 years. There's no reason they can't. They're going at 20-30%.
Yes.
In fact, they may probably add more.
Yeah.
So you're talking about very, very large behemoths getting built under our very noses.
And 2,000 crores is almost
200,000,
200,000 crores is almost $25-30 billion.
Yeah. And that'll be $50-100 billion. So I think they're getting built. It's not too far away. Our economy obviously has to keep pace.
And in your journey, right, you have been a capitalist for 2-3 years. What were your learnings that you applied back to BigBasket? And now are you seeing you interact with different kind of VC funds.
No, I think, see, some of the learnings which worked well for us, I realized one was to maintain absolute transparency. Just tell the bad news. It doesn't come to us naturally, but tell the bad news upfront.
Yeah.
Just own up to it. Own up to your mistakes. Because, see, the problem that a VC has, he's anyway a passive investor.
Yeah.
Right? He doesn't know, can't learn your business well enough.
Yeah.
Right? And if you give him a quarterly update, by the time he figures out what your business is again and refreshes his memory, that meeting is over.
Yeah.
So he's never on top of things. So unless you involve them very consistently, drown them in information and understanding about your business, and convey news to them as it happens, they really are not plugged in. So there is a lot of anxiety building up because you're committed capital.
Yeah.
Oh, kya ho raha hai? Pata nahi, arey. If he sees only the top line and say, okay, top line drop 10%, arey, ye to band ho jayega. Or profit drop, arey, they will run out of money. So the anxiety for somebody who doesn't know is far higher than somebody who knows. Acha, ye to kar lenge. They have a plan, they will figure it out. So one of the first things we did when we started BigBasket was we said we'll have a 15-day board review. So you used to do, and for the first 2 years, I think we did a board review every 15 days.
Okay.
For the 6-7 years of till I think Tata's came in, we did a monthly review. And even now we do a monthly review, even with them. A monthly review with our entire board. And I mandated that they have to attend. So we would rarely have any board member missing, if ever, only because of personal emergency, but they would all attend. So they're all clued in. I would tell them this is what is happening. And this is what you're thinking. You have something to contribute. If you have some way to help. Otherwise, this is the state of affairs. So I think that brings in a lot of comfort. I mean, up and down, they also understand. They have a plan for it. They know at the end of the day, not every portfolio company is going to do well. Not everyone is going to do well at the same time. People go through journeys. So I think that builds a lot of comfort. And more importantly, it builds comfort in you as an individual, you as a team. And that is, so then what also happens is, if they have a problem, they come and tell you, what you're doing, I'm just completely unhappy about it. Or that guy of yours is bad. Otherwise, they are also they find it very hard to tell you the bad news. Yeah,
because there's no trust.
Or their opinion.
There's no trust between the both parties.
I think that becomes very important. So involve them intensively was the first lesson I learned. That's it. And give the bad news. Right. Good news, mando chalega. But at least you must give them the bad news.
And, people would have expected, right? Or I would have expected, because I was a huge consumer of BigBasket. Even during the lockdown, I thank you and the entire team for saving us from lockdowns, right? You delivered like 8,000-10,000 rupees of groceries, next day or even a few days when it was hardly available. But people would have expected BigBasket to take a lead as the world is changing. You mentioned a few reasons why BigBasket couldn't take up the lead in the online grocery. But what do you think was the fundamental DNA difference that now you are playing a catch-up game?
No, I don't think the DNA difference. I think it sometimes things happen because they're outside your control. Yeah. Right? In this particular case, we were actually pursuing an acquisition, which worked brilliantly for us and for that company. And we thought it was a done deal. Yeah. Right? And that cost us about 6 months, 7 months. And if that had happened, we would have been a very different story there. And so at that point, then we decided, okay, fine, we'll do it ourselves, doesn't matter. So I think that is one part of it. So it was less of so it was not a DNA in terms of understanding that there is a market change happening and that we should pursue it. I think that we had. So I think that slowed us down. The second thing that happened was also, we went through this entire Tata transition. Yeah. It was around the same time.
Many changes are happening parallelly.
Yeah. So that always takes away bandwidth of management to implement a new. And to also, when you're getting into a new ecosystem, you can't take very aggressive steps and say, now my plan has changed, I'm going to do this. Yeah. Oh, that acquirer will say, kya ho raha hai yaar? You told me 3 months back you said this and now you completely changed your... So I think, that also sort of slowed us down. But this is really two things. So I'm not worried so much of DNA. Okay. I think that is not the problem. I think we just got in a little late. And after that, I think we're executing as well as anybody else. So I don't think we're going anywhere. Yeah, but I don't see BigBasket as visible, at least in marketing or among as the top 3 players like Instamart from Swiggy or Zepto or Blinkit do. That's starting to change and has changed over the last few months, and you'll continue to see a lot of change there. And I think we'll become a lot more visible. I think some of it also has to do with we were also making a lot of changes, like changing our entire customer-facing proposition to make it into a single door, changing our entire backend to just enable complete just quick commerce, all of it. So I think that has happened. Most of it has happened now, and I think in the process of rolling out. So I think this will change. It's a matter of time. Yeah.
I think the other thing is what I as an outsider feel. Right. Tata Group takes a multi-decade approach to any change. For example, they acquired Air India, and people expected Air India would change overnight. It has not changed. Right? But Tata Group is fine with it.
Airline business is very difficult to change. That supply times are there are 1 year, 2 year. You can't ask Boeing saying order de diya aajkal de do plane 2 saal baad aata hai.
Yeah.
So I think that is a challenge. That's a different challenge. No, but I think one of the things that we've learned from the Tata Group is always to take a longer term approach, because their point is don't build it for the short term.
Yeah.
If you get revenue now, don't worry about it if you don't get revenue now. Kuch nahi hota hai. 10 saal baad jeetenge chalega.
Yeah.
And there are enough businesses of theirs which have taken their own sweet time to get to, but once they have just execution behemoths and profitable and hugely profitable, right? And there are so many such companies that have. So they've gone through the cycle so many times. They understand the power of just staying in business. They understand the power of accumulating brand salience over a period of time. And so therefore, and how markets change. And sometimes you can't predict. You may rise like a rocket and then fall like a rocket also. So it's sometimes easier to just be steady. And so therefore they are not, let me put it this way, very fussed about what is the rate of growth and how soon will you become number one and why shouldn't you be the largest in quick commerce and all that. I think their focus is build a good brand. Let's make sure that we don't dilute that. Keep the customer focus and revenue will happen.
Which is very different from let's say if BigBasket was still a VC run company.
That would have been very different. You would have been under pressure to just say, just increase your top line now, just get to whatever numbers that you need to get to. It doesn't matter what capital it takes. Let's just raise that. So this is a very different approach. That's it. And it's good. It sort of plays into our ethos.
Yeah. But you think that, the 3 co-founders of BigBasket will still be running the BigBasket 5 or 10 years down the line?
Maybe not 5-10 years down the line. I think definitely for some years to come.
Yeah.
And that is goes without saying.
But then the DNA, are you worried the DNA of the company would change after the founders have left?
See, the DNA of a company doesn't change as long as the DNA is the same across the company. It changes if it's sort of a very founder-led DNA and everybody else is doing something else, right? Then it's a different problem. Then the new leader comes in, that it adopts that DNA. So that is one issue. So you look at it this way. Why doesn't the DNA for the Tata companies change? The CEOs change, the businesses change, but the brand remains the same, the core values change the same. Because people have been taught a certain way of operation and they've been schooled in that and they've lived that and they've seen that play out over a period of time. They've seen people walking the talk. So I think that's the case with BigBasket also. I think we've had a team which has been with us for a very long time. They're very long-term oriented. They've been through ups and downs with us. This is not the first time that we've been behind or up or down. Right? There are lots of times obituaries have been written. So this is one more time and I think it'll pass. So that doesn't phase us. So therefore I think, and the team understands that. We know what we're capable of. We know what our strengths are, what we can deliver. So I think as long as the DNA is incorporated, where you're a modest, self-effacing, less talk and more about customer focus and make sure that you deliver on your customer promise, I think and that's the DNA we have set. So that will continue to hold.
What have you inculcated from Tata Group which was not there earlier?
I think the 2 things, right? That you can actually run a company very well, right, by focusing on key parameters and by incorporating very strong governance, right? So it's not about necessarily having a hands-on granular view of the company. You can actually run the company very efficiently, very quickly, figure out what the key issues are, provide key strategic advice, change the direction of the company by just being focused on fundamental metrics and by providing very strong corporate and financial governance. So I think that is one key learning. And that's very interesting. The second part is obviously take a long-term view. And when you shift your focus out 2 to 3 years, and in startups, it's very hard to do because you're always fighting a daily battle or monthly battle. Or aaj kya ho raha hai, iska market share kya hai, or isne kya kiya, isne kya promotion kiya. You suddenly shift your focus out 3 years and they say, okay, what do you think will happen 3 years later? You're forced to think. Right? You're constantly, therefore, working towards a target which is, far more in the distance than it is today. And I think that changes your thinking. You become long-term in your thinking. You start thinking, maybe this will help me for the next 1 year, but let's not do it. 3 saal mein, this is not going to be a great business, or this is not where I would want to invest money in. Right.
And can you give us example of the first? Like, how do you implement that?
Which is the financial and corporate governance?
Yeah, because you said
right. So I think it works at 2-3 levels. First is really building very transparent financial reporting mechanisms, right? What does that mean? So first identifying what are the key metrics, right? For example, in our business, the key metrics are what is your average order value, what is your gross margin, what is your NPS, what is your rate of return, what is your write-off, what is your orders per dark store, right? All of this, or what is your per order cost of delivery, CPO. You have 8 or 10 metrics, which really, you give me those and I can tell you what the health of the business is. And you give me a trend over period of time, I know exactly what's happening in that business. So I think building the right set of metrics is the first one. Identifying and building the right set of metrics. Once you identify and build the right set of metrics, building a reporting mechanism around this, which is reasonably current and which is live. So today we have on all this, we have always had this. We are lucky that way, we thought of it that way. But having this on a daily basis, knowing exactly what is happening, you have a live dashboard in the business that allows you to know at any point in time, you can take a dipstick and say, and you have a running data, you know, over a period of time, how it's faring, where the trajectory is, what's going on, where is it dropping, which city it is, which dark store is not doing well, which manager is not doing well, which picker is not doing well, which business is not doing well. So I think that building the granular set of, identifying the set of metrics, building the reporting on top of that, and then reviewing it. The third part is also hard, right? You can build a set of metrics and present it. Nobody has the patience to go through it and say, nahi main dekhunga. So they build the framework to review it. So they have a team which goes through it, culls out the insights from it, reviews it and says, okay, this is what it is. So therefore they do at all 3 levels. Identification, making sure that it's implemented, and then reviewing it. And when you do that, automatically your financial reporting becomes very, very strong. And obviously it doesn't stop there. These are business metrics. Then you have financial metrics, which is in terms of what's your cash flow. So what's your working capital, what's your payables versus what's your outstanding, where are the outstanding, where is this thing, how many days is your promo recovery, how far are you in terms of payables. So if you take those financial levers, take this, automatically you can very quickly figure out what's happening in the business. And a lot of this is common across businesses. They're not necessarily unique to every business.
I think this is an advantage that you built,
right.
Which advantage Zomato had, because they always had InfoEdge as their
which is not a typical VC. It is not a it is a strategic more than a VC. So it is not going anywhere.
They were a public company before they became a public company.
Exactly. And I think that's the advantage we also have. It helps to. And then from a corporate governance perspective, making sure reporting mechanism there, making sure auditing mechanisms are very, very rigorous. You go through every part of your business, audit it, and building that. So
we covered a lot about India, the tailwinds. My 2 worries are right now that our GDP per capita is $2,700. Right. And as you said rightly, the bottom of India, the largest part of India is sub-Saharan. When do you expect that to change?
That's the let me call the $1 trillion question, not the $1 billion question, because that will determine when do we hit that $10 trillion. And I think, there are 2 ways to think about it. One way is the trickle-down theory, which is saying that, as you're rich, become richer, automatically trickles down. It doesn't always happen. And that's the worry I have, that sometimes this won't happen. But there are 2 things that can change this, right? Now, when I told you about the tax base, and when you look at number of people in each of this India 1, India 2, India 3, there is a lot of movement happening between the cohorts. It's not that they are static. Right? India 1 is not 30, it will become 50 in another 2-3 years. India 2 is not 70, it will become 120. So I think that is one movement which will keep increasing but the problem that remains, your largest cohort is still below that. And how do we therefore make movement there? And there things will only change by 2 or 3 things. One is significant state intervention and significant state spending. Some of it is starting to happen, and it's happening indirectly. So if you look at there are funds which are beginning for early employment now. The government has recently announced a scheme. There has always been this Manrega, which created a significant amount of capital flow, right? To the extent that people said, I don't know whether it's benefiting or whether people are stopping to work and just enjoying the benefits of Manrega. But that has made a difference, and that has really empowered at that level. The third level which will happen is, one is financial inclusion. So that is starting to happen. If you just look at the number of this Jan Dhan accounts that have been set up, it is just phenomenal, right? But all this follows, I have noticed, infra development. One of the biggest things which this government has embarked on, and which has consistently happened over the last 4 or 5 years, is starting to build 3 things: roads, rail networks, and electricity. If these 3 reach everywhere, automatically it powers change. It's so funny. If you go back in the history of most countries, even if you go back in the history of US and figure out why US became such a dominant power, actually eventually you can trace it back to roads. And just because they built that road network in the 1950s and 60s, that eventually built that connectivity, built modern retail, built transportation of goods, built people mobility, built access, built healthcare, built everything, because that created that network. And I think that is starting to happen in India. Right, we are maybe 2-3 decades behind, but that is starting to change. And one reflection of that is to see how many flights does Indigo have to cities which you didn't think Indigo had a flight to, right? And I keep going to, whenever I go to the airport, I look at, oh shit, Indigo has a direct flight to Baroda every day. Indigo has a direct flight to Guwahati every day. Indigo has a direct flight to Patna every day. And I'm wondering, I said, how many people are traveling from Bangalore to Patna to Baroda? And I said, suddenly it tells you, okay, this is changing dramatically, right? And this is what will really, this connectivity, whether it's through road or through air traffic, will change India, number one. And that infrastructure getting built will eventually pull everybody back.
Yeah.
Because it just provides, because what happens is industries move outside because access improves and therefore creates a local employment. Agricultural markets become easier to target because the farmer can't reach, he can't drive longer, or people can't come to him from too far, both ways. So it becomes too expensive. Transportation kills you, the cost of transportation. Now this provides access, right? So this changes the dynamics of how access to economic benefits works. And I think that is what will change India.
And my other part is, right, when will India see Microsoft, Google, Amazon like outcomes built out of India? Because the US, if you see the US GDP, right, the top 10 to 15 trillion dollars of it is dominated by 5 companies.
Exactly.
Nvidia, Microsoft, Alphabet,
Right.
Apple, and Amazon.
Well, think of it this way. Think of it for a moment that you're China, right? And you're thinking 10 years back, saying, when do I have, or 15 years back, thinking, when do I have my Microsoft and Google and my this thing? And if you look at it now, forget Microsoft, Google, and Apple. They have their own Xiaomi's, they have their own Alibabas, they have their own Tencents, they have their own, and more importantly, they are investing in terms of technology. China crossed US last year or year before last in terms of number of patents filed, right? So they're taking technology leadership in all developing areas. Whether EVs, so I think they left US behind a long time back.
Yeah.
I mean, Tesla is a sort of a beacon of hope, but I mean, China was full EV. I mean, completely different. Automation, AI, robotics, they are far ahead of everybody else, right? So I think, and this has happened over the last 15 years. So companies can make this transformation. So it is not, so countries can make this transformation, companies can make this transformation. But it doesn't happen until the ecosystem is ready for it. And what happened to China was, one, per capita was very high by that time. I mean, compared to where we are today. Infra had already been built, or the government was powering through building crazy infra. And third, there was significant infusion of capital from the state to power this new areas. They just said, do whatever it takes to get it done, and we'll put in the money. It doesn't matter long-term costs. So that kind of commitment, which is essentially giving a blank check to an industry and saying, build it, just change the game. And I think that is some parts of it starting to happen. Take our manufacturing PLI now. For the first time, any government has over the last few years, or in this entire time since independence, talked about manufacturing and saying, how do we actually become globally competitive? And so you're starting to see changes. You're starting to see companies invest. You're starting to see, Tata's investment, 20 billion chip plant. You wouldn't have thought that possible. Who was building a chip plant in India? So I think these things take time. So whether we'll get a Microsoft, Google, or we'll get a generative AI startup in India, I don't know, or something else which will happen. But it's not going to happen in the next 5 years. But it'll probably, do you think there's a probability of that happening in 15 years? Very, very high.
Yeah.
So I think that's what will happen. And it doesn't have to be Microsoft, Google, and international. We are English, so maybe we can be. But if you look at the Chinese tech companies, because the local economy is so large, they're as big as any of these companies and as profitable. So I think that will happen.
Yeah. I think the one thing that India is now learning from China,
right?
And that China 30 years ago became the manufacturing hub of the world.
Yes.
They said we have cheap labor, dedicated labor, and one instant approval to set up your factory.
Exactly.
And we don't care about our environment.
Right.
You can do whatever you like with our environment and set up here.
Yeah. And we'll provide you all the incentives required. So essentially, they made it easy for technology to come to them first. Yeah. Because they also in the same boat, they didn't know how to build. Right. So whether you want an Airbus or whether any of these people, they went and built there.
Yeah.
And once they built, they got the technology. They become very good at manufacturing, invested in scale, and acquired dominance.
Yeah.
I mean, look at the route that they've taken to EV dominance. The industry, government supported initially, leading edge of research. So invested in labs, invested in research, invested in companies. And once you have local market scale, mandate local market adoption, build scale in domestic markets, then just go international. Now they are at a cost structure and a technology space where nobody can compete with them. If I were in Mercedes or Volvo or BMW, I'd be very worried. These are brands not going to last.
Yeah. And one thing India right now has an advantage of, because of whatever negative connotation China has earned over the last 2-3 years because of COVID or state policies, right? India has become the alternate to China for global investors.
Yes, it can be an alternate to China. I think we need to pursue it very aggressively, and we also need to make commensurate investment. But at least we've made a start, and I think that's visible now.
Like Apple setting up plant in Tamil Nadu.
Yeah.
So we in Neon Show we interview various economic advisors like Sanjeev Sanyal, who's chief economic advisor
he's
to PM Modi.
He's the right guy too, actually.
He's a fantastic guy. So he says that center has done what it has to do in the last 10 years, and now in the next 5 years, right? The center is saturated, like the schemes that it could do, right? Now it's up to every state to follow the center,
right?
And because India is such a state party-wise.
Yeah, there are a lot of
variables.
Yeah, a lot of variables. Because state level variables, you also have company level variables.
Yeah.
But think of it this way: collectively, you just look at your top 3 groups, Adani, Ambani, and Tata, and look at their investment plans, what they've invested, and what they were doing 10 years back. It's multiple fold.
Yeah.
So I think that will continue to drive. Right? Every one of them is getting into new areas. Whether it's EV, whether it's semicon, whether it's defense, whether it's production.
One thing that I want to touch as we conclude the podcast is, want to share with the audience what has been, if you can share bits and pieces of, what has been your journey of financial independence.
So I used to work for Wipro. I think before that I joined TVS Electronics from campus, and I wasn't worried about. At that point in time, financial independence, I was more worried about making ends meet and making sure that you grew in your career. And I joined Wipro and then got exposed to the Wipro ESOP program. And then I realized over a period of time that there's an amazing capability to build wealth longer term in equities and stocks and ESOP and equities and running businesses. And that's what sort of triggered the change in me. And it sort of changed the way I looked at investment or wealth. And I said the only way to really build true wealth is to actually invest in, either earn a lot of money through a job and invest in equities and build a portfolio over a period of time, make smart investment decisions, or get a lot of ESOP and use that, or build your own company. And so therefore, when that occurred to me, it always became an option, saying I think at some point in time you have to attempt this, because the risk reward for this is just stupendously in favor of building this. So I think the journey sort of got triggered by this revelation in my mind that the true wealth creation happens through equities, especially if you're not a generational wealth person. And the only way you can build substantial wealth is through equities. Now, whether you go through investment route where you earn enough money and put it into it, or you go through ESOP route where you work in early stage startups and do it, or you do your own business. So I think around the time, therefore, I made the decision saying that I'll either start or I'll join a startup. And so therefore it became very easy for me when 3 of us actually first talked about getting a startup.
36 years old.
Yeah, and he said, so I remember meeting Sudhakar and Hari, and they were just thinking about it. And Sudhakar said, would you like to join me? I said, yes. There was no discussion. And it was so, it took me roughly 3 seconds to tell him yes. Wow. I didn't even think about it. In fact, Sudhakar, I said, have you thought it through? I said, no, I am very clear in my mind. I've thought it through a long time back. This is the path that I need to take.
And how financially well off were you when you joined?
So I was working at a salary, and those salaries those days in Tech even were not that great. So you were reasonably okay, but you didn't have a nest egg built for...
but let's say if it didn't had worked out, you would have...
I would have had to go back to a job, for sure. There was no question of it. But you had enough capability to last maybe a year.
Yeah.
And so worst case, you could last a year. But beyond that was obviously you had to go back to a job. No second thoughts.
Yeah.
So I think that journey started, and it took longer than a year. And so it became quite difficult. And we said, but by the time I became even more, had more faith in my belief that, this is the way to go. And this is taking time longer than, but I'm on the right path. So I think that was a great thing, because The moment the first startup didn't work, we pivoted, and that started working. We said, okay, fine, we have now really found this well. And I think that sort of kept continuing to. So when we sold the first business, we made some money. So that made us reasonably financially independent.
But not completely that you could live it off for the rest of
your life. Not that. So we said, okay, but this at least gives you a good cushion now. You can do multiple things. Think about what you want to do.
5 to 10 years.
Yeah. And then I went and worked with the private equity firm. So I think that also gave us some financial freedom. But I think the real wealth creation happened through BigBasket, and when we sold some of our initial equity, a fraction of it, I think that created wealth. What we had done before created wealth. So I think a lot of my financial independence has come through really my startup journey more than anything else. And then obviously, so my advice to everyone, at least do the startup early rather than late.
But let's say, I would say it's your hard work, but a lot of luck also. Like
it's a significant amount of luck. It is extremely. See, there are two things that in any startup that work. One is you need to have patience. Nothing happens in less than 7-10 years. You can't do anything. I mean, most people keep talking about somebody build $1 billion company. I mean, like take Zepto over in 3 years. But those are the exceptions to the rule.
Yeah.
And these are the ones which get talked about. But 99% of companies don't reach that kind of outcomes very quickly. So it's typically a 5 to 10 year journey. And therefore, you need to be tenacious, you need to be resilient, you need to be able to survive. First, more than even luck. And if you do that, I find that a lot of times luck finds you instead of the other way around. Right? You may have one bad year, something will happen, you'll find something else which works. You'll figure out, okay, this doesn't work, that works. Something happens. And that happens because you're operating in that space, you're looking at multiple things. Your ecosystem is focused on that space, so opportunities come to you. So your luck gets created. So the first is, so it's not luck that leads wealth, it's tenacity which leads to luck, which leads to wealth.
But let's say even Fabmall getting acquired by more or BigBasket becoming the outcome that is today, they are 1 in 10,000 outcomes.
Yeah, exactly. It's very, very rare. It's very, very rare. And therefore, it's not easy. But, all the startups that I have seen, about 50% of the ones which I've been involved in have shut up and people have gravitated doing something else. But all those guys have gone back to doing something else which has worked out well.
Okay.
Funnily enough. Right? Of the 50% which did well, they've all had, some have had great outcomes, some had middling outcomes, some had reasonably okay outcomes. It wasn't that it would have been significantly better if they had actually worked at the corporate. So I think, and they're all very happy because I am independent. I'm not answerable to anybody. So even the people who didn't have the best of outcomes probably got away. And I think that's to do with the timeline that we are living in. It's also, 20 years back, this wouldn't have worked out this way.
Yeah.
You're going through a period of growth. You're long on the economy. If you're long on the economy, you have to be long on startups, you have to be long on equities. As simple as that.
And I think you think that the $10-20 trillion economy that we are talking about today of India, would startups play like a $2 to $5 trillion role in that?
100%. Right? Think of these, the top 10 companies today itself. And if you add up their market cap, and even today, and assume that this will grow 5x, 10x over the next 10 years, that's the minimum that you would expect in the top performing.
I would say top 10 companies today would contribute $200 billion of market cap.
Yeah. And you assume now 10x growth. So they will, 100% they will. In fact, there are companies which are not born today which will contribute to that. Which will probably contribute $1 trillion to that.
Yeah. But I'm looking forward to seeing India's first $100 billion startup.
Yeah,
I don't know whether it will be Zomato or somebody else, but
possibly Zomato, possibly Swiggy, possibly Flipkart. Though it's acquired by Walmart, it's still an Indian startup.
Yeah. But it will still create the amount of wealth.
Yeah, it does. It will.
For India. And just before we conclude our discussion today, Vipul, want to touch upon your background. You mentioned that you were from middle class, worked in Wipro. At 8:36, you jumped into startup.
Right.
But where did you grow up, and what were your parents like?
Yeah, so my father was in the defense services. So we had a transferable job. So I did all my schooling every 4 years. We got sort of uprooted. Did my schooling in Maharashtra and in Madhya Pradesh. In fact, finally, when I passed out of high school in Madhya Pradesh, my wife said, my mother said, no more traveling. Let's stay put. Let the kids do their college. So I did my BSc and MSc in physics actually, and I was all set on getting into an academic career because I started to do a research program and I was thinking of applying to the got admission to the University of Columbia, and I was thinking maybe it's time for me to really become a scientist. And then through chance, somebody introduced me to, I talked about MBA program and I said, this looks very interesting. I would love to do this. This somehow appeals to me. So I wrote the CAT exam, and along with that, I wrote the Air Force's exam, because that was more on a lark. And so I remember it was so funny. I did my, Air Force medical the same month, and my IMP interview in the same city within a month, which was in Delhi. And when I got through, I said, yeah, this is I definitely want to do this. So came to Bangalore, joined IIM Bangalore in 88. Started my career with 86 and finished in 88. Started my career with TVS Electronics, which was again a startup. So in a way, it was a role this was a company which is newly formed, part of the TVS group. They were just starting into computer peripherals for the first time, and they were setting up a new plant. They just done a collaboration with the Citizen of Japan, and so they were working with them and other companies. And I joined as part of marketing and sales, and was sent to Bombay, saying, "Please start Bombay. We don't have anybody." So it was a ordeal by fire. You were practically a startup. You had nothing. I had one desk in one Lucas TVS office and one phone, and said, "Aap becho or please collect money also. And you have some money outstanding from people you supply to, please collect that also." So it was quite an interesting experience, and that taught me a lot about marketing, sales, working through a startup. And that's where I met Sudhakar and Hari. But all three of us were in the same company. Sudhakar was involved in the project right from day one.
In TVS.
In TVS. So it goes back that long. So therefore, I met them in 89, and we've been together ever since.
Wow, 34 years of...
Yeah, and then I worked till about 94, joined Wipro. I was in the Wipro peripherals part of and then part of the IT business till about 99. When all of us got out and started Fabmart, which became Fabmall, which eventually we sold to the Birlas.
So you really saw the Indian economy opening up in 91.
Yeah.
Did it make any difference to your life?
Oh, it did, because it completely changed your perspective, right? You were growing up. First, when I was working for Wipro, my last 1 year was as a corporate business development manager, and one of the projects I was handling, which was internal to Wipro, was really to set up the Wipro intranet. Right, so you had to make a presentation to Premji and say, these are the things we're doing, and to businesses. Then work with the businesses to set up the corporate internet. So that exposed me to the power of the internet. For the first time, I realized what it was, how it worked, what it needed to get it implemented. So, which is why I landed up where I am today. So it's, those choices sort of dictate what you eventually become. And that's how, and Sudhakar on the other side landed up in Planet Asia, the CEO of Planet Asia, which is an IT services company, and Hari joined him. And so they were exposed to the internet from that side. And at one point in time, we were planning to use Planet Asia to do Wipro's corporate, intranet. So he said, I was speaking to them, and that's how I met Sudhakar again. And I said, okay, both okay, let's start.
Thank you so much, Vipul. I enjoyed this conversation a lot. I learned a lot.
Thank you. So did I. Thank you.
And I hope my listeners enjoyed as much as I did.
Let's hope.
Thank you so much.
Thank you.